we are now joined by none other than our guests for today. P, do you want to give the proper introductions and this time pronounce everyone's names properly?
No, I refuse to pronounce the names properly. We've got friend of the show, Ben Prentice, who is the creator of the incredible website, What the Fuck Happened in 1971. If you haven't seen it, where the fuck have you been? Go check it out immediately. He has many other accomplishments, but I will let him tell us what those are. John, pronounced Fakhoury, not Fakhoury or Fajiji or any other horrible pronunciation, which I've done. We've known each other for a while. John has the dubious honor of being the person who helped me ascend to the whatever the fuck I am right now. We became friends on Clubhouse, and he decided that I was cool. That is the sum total of your accomplishments, John. He's also the CEO of an MT company and a bunch of other awesome shit. John, Ben, welcome to the stage.
Yo, what's going on? Do we have John or not?
What's up,
John?
Pete? You guys hear me?
Yeah, we
yes,
got you.
yes, we can.
Yes, 1 for 3, baby. Let's go. I was gonna pronounce Pe, and thank him for having us. But,
Hey, did you guys
glad
not get
that
the
he
memo?
was.
Where's your beefsteak hats? I thought we were all.
You know what, dude? I have a
Oh,
pink
yeah.
one, and I probably had I known there was a beefsteak memo going on, I would have rocked it. Actually, the funny thing is, I was wearing this accidentally, and this just happened to be a Bitcoin hat.
I don't do hats anymore. Sorry, Ben.
If I had hair like you, I wouldn't do hats either.
Gotta let the flow rock, baby. While I got the flow, it's here to be rocked out.
Some of us don't have enough of it, so if we had as much as you, we'd be rocking the hair, dog.
You look glorious. Did I pronounce your last name correctly, finally?
Yeah, but you've done it. Like, the funny thing is, and I don't know why you give yourself so much trouble, when we're just shooting the shit or we're talking and my last name comes up, you don't actually like have this, anxiety attack right before you go to pronounce my name. And it's just hilarious because like only when you do it on like public forums do you go like Fakhoury or Fakhoury. But he says Fakhoury just fine normally, yeah.
I see Fakhoury and I trip up. I'm like, wait, maybe it's pronounced Smith. I don't fucking know. Who am I? And every time. But funny. I appreciate your patience. I also did a terrible introduction for you. Can you please tell the people who you are from the perspective of a full-time baller? Please lie as well. Inflate your accomplishments.
I'm a full-time Bitcoin dad and a part-time CEO, early stage investor, life liver, Bitcoin obsessor. I think that tackles it. Yeah. Oh, now I built the Bitcoin product too. So that's what I'm most proud of, actually. We built the Settings card, teamed up with our friends at Get Village, have the first college savings program. Sorry for the show. Bitcoin exposed college savings plan. So check out Get Village and Settings. It's how I bribe my kids to do chores effectively.
Yeah, that's dope though. And as much as we love to, prop up businesses that are utilizing Bitcoin and especially helping onboard more Bitcoiners, I don't give a fuck about talking about any of that today, John. Quite frankly, I choose blood and I want to continue our arguments from spaces last night. So
let's get into it.
So in case the audience was not here at the very beginning of the show where we went over these quick little facts, Fed raised rates 75 basis points. We have officially gotten our second consecutive quarter of negative GDP growth, and none of the adults in the room seem to be able to define what the fuck a recession is. So I want to start with the last one because holy fuck. Like, we even brought up a story from the Financial Times this morning that, thank you, P, for screenshotting the title, that was only then changed from saying U.S. enters technical recession to U.S. has negative GDP growth. So what's going on here, guys? Ben, who did you piss off? Why are they changing the rules? And why can't any of these adults fucking just say or define a recession?
It's all a confidence game anyway, right? Markets are confidence games. And, as we kind of talked about last time, Snyder's work, who I know John's a fan of as well, kind of elucidates that the Fed really, a lot of what they do is just kind of posturing for markets. So, saying recession out loud is really a dirty word. So they're going to avoid saying it as much as they can. I'm not an expert on this stuff. I don't know what the definition is, but like it's clear that we're in some kind of downturn. So that's what I say, and that's where we are right now. But Fed. Jerome Powell came out and he said that he kind of said we're ready to pivot if we have to, and markets like that. And their proof is in the pudding. We're in a little kind of bear rally here, I guess, right?
So we're not going to try to call bottoms. None of this is investing advice. But Ben, do you think this is like a pure bear rally with another leg lower, or do you think that a potential intermediate bottom is in for the time being?
Yeah, I mean, I definitely yield to John on stuff like this. He follows these things more closely, but if you kind of zoom out a little bit, I don't think that that we're in like a fundamental state of our economy, of debt loads, amidst all this inflation and supply chain issues, energy issues, huge one. I don't see this being this softish landing. You either going to get a little more inflation and markets kind of rallying, or you're going to get more recession, and then the worry, like we talked about last time again, is that those downturn things can they can kind of cascade a little bit. So John always makes fun of me for like not calling which way it's going to go, but to be honest, like if I had to make a call, gun to my head, I don't think we've seen the worst of from equities and stuff like that, unless something breaks quickly and Fed pivots very quickly. I still see us going down a little bit from here, and I focus on the long term anyway, so I'm not really worried about it too much. But you never know when these things can get out of control.
You fucking bear.
John, you're awfully quiet.
You're not used to me listening is the only thing. No, but so I tend to agree with a lot of what Ben just said. I don't think we learned anything new yesterday. I think there was some confirmation. So it was like another dot on the plot to be able to confirm where things are going. And I actually agree with Ben thinking that there isn't going to be a softish landing, even though I'll try to define it as I did in my tweet yesterday. I think what I learned yesterday was soft landing means getting inflation down and only having 6 or 7% unemployment, which historically, by the way, like a 6% unemployment rate is marked by typically, good economic times. And it's been a good, a number that as, if you're below that number, you're in good shape. If you're above that number, you start getting bad shape. But the Fed does have the covet, and however you want to view the manipulation of labor participation force, which Jerome Powell actually acknowledged and said that he's been, sort of surprised and disappointed that we haven't had much of an improvement in labor participation since January. Especially being on the other side of COVID to a large extent, lockdowns breaking up, people kind of going back to work. You haven't seen the participation, but here's the headline in my mind. Jerome Powell sort of wants a recession, and not that he wants it, but if he has to, right now, it's inflation is public enemy number one. And if he has to team up with public enemy number two to get public enemy number one, he'll do that. And so I think Makarov put out some really good data that showed, and I mentioned this in the spaces yesterday, Q, so I apologize for repeating this, but just in case for folks who weren't there, Makarov has shown 11 out of 11 times where we've had these sort of setups with inflation, anytime that we've gone into some inflationary setting, and we've kind of had a recession, ultimately it's taking care of the inflation. And so it winds up being sort of like this chemotherapy, if you will, for an inflationary pressure. And if you believe what I do and a lot of others do, and if you're listening and believe Jerome Powell to a large extent, the Fed is focused on inflation. And if that's the case, then they're totally fine, or at least they've been setting up the language, and I'll read it here in a second, that they expect job losses, and they sort of want job losses because they know those job losses mean that they'll be able to get headline inflation back under control. So I tend to agree with you, Ben. I think that we're likely that this is probably a bear rally. This probably lasts for 45, 60, 90 days. I don't know, by the way, but that's just what my gut tells me. And that we still have some new lows to see in equity markets and possibly more corrections to see in things like real estate.
I want to really spend some time, I think, unpacking inflation with you guys, if you'll entertain me for this, because inflation can be caused by a lot of things, and we've been told a lot of different things are the cause of it. But if we really actually go to the textbook definition because people seem to be debating all these fucking textbook definitions. There are two things that will drive inflation and prices: supply and demand. And either of these things can be adjusted in turn to cause inflation. I sit on the camp that definitely believes that a majority of the cause is demand. However, there is some issue that supply has caused, a diminishing amount of supply with COVID lockdowns and all these factories all around the world getting shut down, supply chains getting log jammed. You had that fucking, what's it called? That one boat that stopped the Suez Canal, I believe it was, that like stopped any shipments for like a 72-hour window. You have these little pockets of issues in the supply side of things, but then you have so many things in demand. I will put a number on it saying I think it's 75% demand, 25% supply side. I'm curious from the three of you, sort of, how would you weigh what's causing inflation between supply and demand here?
That's a good question. It's really hard to do too, right? Because, like you kind of alluded to at the beginning there, people like Milton Friedman only define inflation by an increase in the monetary supply. And monetary supply is really hard to track now. Base money doesn't really mean anything. How do you even track that? And I think there's a lot of confusion about QE versus deficit spending. It's hard for me to say which one it would be because again, it's hard to even see the data for those things. But what I would say is that I think the monetary inflation from some of the spending from COVID took it. Seems that when you print a bunch of money through deficit spending, it takes a while for that to kind of ooze out into the economy. And I think more of what we've seen in 2022 is part of that monetary inflation. I think initially what we saw in 2020 and 2021, when things really started heating up, I think a lot of that was the supply chain personally. But I don't have hard data on this stuff. And really, I'm kind of just speculating. I do think it's both, but I think it's probably more of the supply issue from what I've seen. Especially going into the war and oil and stuff like that. But it's tough too because 1971, if you look at oil prices, they spiked right in 1971. I don't see that's a coincidence. I think when when the printers do get turned on, people go to things that they know they'll need, like oil. So again, very hard to discern these things. But I'm curious to know what John will say.
No, I largely agree with you, Ben. I think the sort of when you look at things and reasons why things happen in life, like there's typically a regression, right? There's contributing factors in different ways, and I think that's what Q is getting to. And what I would say is that I largely think when people think about inflation and they think about it as a monetary phenomenon, Jeff Snyder talks about this, Friedman does. They talk about it as the expansion of money supply. But there are certain things that I think when you're reading and talking to just everyday folks, they're thinking things in terms of price inflation, right? Like they don't know what the money supply is. They just know what the price of their grocery bill is. They know what they paid at the pump. And you see that reflected in political polls right now. Like the number one issue in the upcoming election is inflation. The number two issue is price of oil. And so you could argue that's inflation in their minds, right? And so what I would tell you is it's impossible to ignore shutting down a world economy and understanding what type of bullwhip effects kind of happen through supply chains as a result. It's impossible to ignore a large oil supplier being in a geopolitical conflict with second and third order sanctions and financial impacts. It's impossible to ignore those things. On the other end, it's also impossible to ignore and to section off the conversation that really is sort of real money printing. And I think this is what Ben was getting to in terms of people being confused about QE and fiscal deficits. There was really $9 trillion that got pumped into the economy at the same time as us shutting down the economy, right? So I've seen some few people in the chat talking about too much fiat chasing too good. That is the reality. And so understanding what percentage of that is which and what percentage of that is not is really difficult to see. But sort of what you're seeing now, and there's still effects on the supply chain, but you're starting to see the impacts in certain commodities right now, P and Q and Ben. You're seeing a cratering in oil, you're seeing a cratering in wheat, copper, right? Copper is a really significant bellwether as it just goes into so many products, et cetera. But it takes time for that, right? Like, the futures contracts on these things were bought months ago, right? And like, so I would tell you that like I think Q, your kind of framing of this is one that I agree with. I don't know what that regression lines up to see, but I think the three things that I highlighted are impossible to ignore. We actually pumped $9 trillion. It had nothing to do with buying bonds and swapping assets in duration in form of QE. That was actually $9 trillion that our Congress gave us. And then number two, you sort of have these geopolitical conflicts. And number three, we shut down an economy like globally, and there's real impacts to that in terms of what price you pay at a grocery store or at a gas station. And I think when we're talking about inflation, that's what most people are actually talking about. I don't think they're talking about base money supply, at least everyday American.
I think there's also another really interesting point, Ben, that you kind of bring up. It's like people flock to their necessities, but like, let's be honest, you're not going to stop going to the grocery store to buying food. You might buy different brands, but you're still going to have to go buy food. You're still going to have to put gas in your car. Like, those aren't things that American families can just opt to say like, no, I'm not going to buy that. It's going to be, no, we're not going to Disneyland this year. No, we're not going to go on that trip to see grandma and grandpa because we can't afford the plane tickets anymore. Those are the expenses that are going to get cut. But to John's point, like, American families just see it in the grocery store. Like, I told this story on Spaces, either Spaces or on the show yesterday, but the fact that my girlfriend and I celebrated that we filled up the car for less than $60 is filled up the gas tank of the car for less than $60. Like, I can't believe it. I'm genuinely celebrating 50% increases from the price of gas a year ago. Where is that breaking point? And I guess more specifically, like, is there a commodity in particular that's going to be that breaking point, either for individuals to really say like, yo, shut the fuck up, we're in a recession, what are you going to do about it? Or for the government itself to finally reverse course and say like, hey guys, like, we're in a recession. Sorry, we fucked up.
Yeah, I mean, I don't know what would make them admit we're in a recession or downturn or whatever the hell you want to call it. It doesn't matter to me. I think to answer your question is we're already beyond that. John just said the number one thing is inflation, and the number two thing is inflation. So literally, this is the number one issue in the country. That's the point, right? We're already there. They have now charged the Fed, and this is a really good point that I hear John make all the time, and we have to shout out Joe Carlosara again. He's the man. Go follow Joe. I get a lot of this stuff kind of distilled from his talking points, but that people, I think people misunderstand a lot. I kind of got off track for a second here. What was I just talking about? Inflation, right? So I totally just lost what I was saying.
You're saying
we were talking about the
inflation
government reversing course a little bit and talking about like how they were defining whether or not like it isn't like if it's a recession or not a recession and how much does that matter?
Right. And I think the point to take home here is that if people want to, so they've charged the Fed with getting rid of inflation, and we blame the Fed for inflation. But as John outlined earlier, the $9 trillion wasn't printed by the Fed. The Fed is a vehicle for that, between the Treasury and the Fed, printing these bonds and things. And now we've charged the Fed with fixing the problem, and the Fed doesn't really have much ammo to fix that problem either. And so we're posturing to have this entity that doesn't have the tools to fix these things the way they want them to, with a problem that they didn't really start. It was Congress that started this, and then Congress started, and well, now you got to go fix it, right? That is a framing that I think a lot of Bitcoiners don't have. Yet, not saying the Fed isn't a huge problem. The Fed is a massively big problem for some of these reasons that they have any influence at all. But that the $9 trillion was printed by us, but we voted for these things, by Congress, by whoever you want to blame for the legislation getting passed and the deficit spending happening. We've been doing deficit spending nonstop for 51 years or whatever, besides Clinton, I guess shout out to Clinton for running the only surplus or whatever. That deficit spending, that is the number one driver of monetary inflation. So that when we point to the Fed and blame all these things on the Fed, and then tell as a society, then tell the Fed they have to fix it. And I would argue that they don't have the tools to fix this, especially not in the way that we want them to, that soft landing. Again, they have to kind of say these things. They can't just shout recession. Oh yeah, 10 million people are going to lose their jobs tomorrow. If they say these things, then you get those other things that I warned about, these precipitous, kind of falls that are really sentiment correlated. So really, I think it behooved this. This is why I think, I think I saw Marty Bent tweet recently, like, why are people so worried about Eurodollars and the Fed and stuff? To understand how the monetary system actually works really gives you a lot more ammo to criticize it and how we could make it better. Because I think just blaming the Fed for everything and then telling them they should fix it is really fruitless endeavor.
Yeah, I couldn't agree more. And Q's about to kill you as much as he wanted to kill me yesterday. Q, I can't see you right now. I really want to be able to see you. Here's the thing. There's reality, and you can actually see it in the language yesterday. So if you read the transcript, what does Jerome Powell tell you, right? Well, what he tells you is we hope to get demand more in line with supply. Why? Because Jerome Powell can't increase energy supply. Jerome Powell can't, rewrite ESG policies. Jerome Powell can't go get the Saudis to pump more oil. Jerome Powell can't call Putin and tell him, hey, bro, a couple of months, man, can you chill out over there in Ukraine? Those aren't real conversations that could be had. And so what you have is a guy who has two mandates and one lever, sort of two levers, but one real effective lever. And by the way, the bond market isn't even believing it, right? The Fed's telling you, hey, we're gonna hike to like 3.8 or 4, and go look at the 10-year right now. Go look at the 30-year. Like, the bond market doesn't lie. And so one of the things that I think I've been frustrated about this recession or not, even though I called it in December, I did. Listen to Clubhouse back in December. As soon as I saw retail numbers in December, I said, oh man, the stimulus ran out. I don't know how long it was going to take, but unless we were continuing to print, and I'm talking about, when I say print, I mean the problem that Ben was just talking about. The people that we elect with 14% approval ratings and 90% reelection ratings, they spend a lot of money, regardless if they're right or left. And I know a lot of Bitcoiners hate hearing that, but it's the truth. And this is where, Q, I think where you and I kind of, Simon, like, we see the similar problem. And it's just like, who I think you're angry at is the wrong person, right? It's just like, are you angry with your wife for cheating or the dude she's cheating with, right? Like, and so, assigning the proper blame here, I think, is important. And also trying to figure out who can actually fix this is also important. And so, like, the real issue here is understanding that the Fed, while not only in my mind didn't cause the problem, even though they're not part of the solution, doesn't, and this is where Ben's really key, doesn't have the tool to actually fix it. And so, like, the only thing they can do is, like, that's why I used that chemotherapy analogy earlier, is like they have to destroy all parts of the body and just hope the body remains alive while they kill the cancer. And that's what this looks like. So all the language you heard yesterday from Jerome Powell, without being too much more long-winded, was, hey, we're going to try to do what we can to get demand in more in line with supply. They didn't talk about increasing supply to meet demand, right? And so what you also, kind of hear from him is, taking credit, sort of, right? Like, in a very clever and well, manufactured way, is like, we're seeing the effects of our policies working. We're seeing softening labor conditions. We're seeing some softening conditions in the real estate market, and he actually then says, and that is an effect of the interest rate rises, right? So, like, he's telling you what he's trying to do, and he's telling you the only tool he has to use it. And he's saying, hey, by the way, this one tool is sort of working, and we're going to maybe lose some jobs in the process. And so, trying to prepare the American people for that, which, by the way, isn't his job, but ultimately I think is some of the evolution of, like, a more politically, charged Fed. But yeah, I totally agree with Ben on that. And Q, that's the key point, I think, and where sort of I'm trying to redirect your anger to a large extent.
Hold on, Q. I know you're ready to jump in on this. I just want to put a cap on what he said. I know, I can see it. I just want to put a cap on what he's saying. Okay, fiat money is still part of the problem, right? The political nature of fiat money is still is still really the main problem here. It's just pointing our guns at the Fed, I think, is misplaced. We can still point it at the people printing the money. It just happens to be Congress. Look at the deficit charts. That's adding new money supply, right? That is the money printing. You got to wrap your head around this, because we can still be mad at fiat money. We can still be mad at the politics around it. We should just point our anger in the correct place.
Yeah, I think you're absolutely right. And that is it's a very important point to make. The Fed is basically doing the best that it can with the shitty tools that it's been given.
I told you last time,
And
Jerome Powell's my
reality
boy.
So
you guys are bros. But I mean, I love to talk about incentives, as we all do. But, it's like, if we were in the same positions with the same incentives, we would probably do exactly the same thing. His job is to ease this descent into, hopefully not financial apocalypse as much as possible.
So I'm going to
valid
just
point.
say you guys can read me like a book. I have the worst poker face of all. You're half right. And the part you guys are right on is that he has no control over the supply side. I fully agree that's not in the Fed's control.
Right.
However, I do not understand why this is so often overlooked. When COVID happened and the Fed initiated their response, part of their response plan was bond purchases of $120 billion a month that lasted for almost 2 years. 120 billion times 24 gives you $2.88 trillion. And that's not Congress that signed off on let's print almost $3 trillion and inject it into the bond market. That was the Fed making that decision. So while I do agree that Congress injecting and increasing the monetary supply as a result of all of their different bullshit acts that didn't end up doing half the things that they set off to do, that also had a negative impact. To be honest, I'm actually more willing to stomach an attempt at helping the people than more of these fucking Wall Street jackasses in the bond departments of Morgan Stanley, Goldman Sachs, and wherever else to make them look like they made money so they can get their fucking bonuses. So that's where my anger really
You're not
resides.
wrong, Q. You're not wrong about that. But I think it's important to kind of separate a couple of these things. So, does the Fed engage in QE, which is basically what you were referring to a minute ago? Absolutely. Most of its impact, in my opinion, and the opinion of a lot of others, Ben's and Joe Carlasari's and a bunch of other folks, is that it has mostly a psychological effect, right? And so part of what they're doing is focusing in on something that we know as the wealth effect. And so I agree. And I don't know how much Joe or Tina or some of the folks that kind of align with my thinking, assigned to how much this inflates assets, but it typically, like, that has an impact on sort of equity markets, credit markets, and assets, right? So, like, those things perhaps are why homes are more expensive, and perhaps why, like, hard, goods are more expensive, that sort of thing, right? And equities at, pre-correction at like 35x, forward earnings or something. Totally. I don't disagree with that. But when we're talking about CPI inflation, right, and what the conversation is with the Fed yesterday, it really has no impact on that. There isn't any real data that shows sort of the impact on CPI inflation, at least as QE, right? So when we're talking about the dollars that are chasing the goods that are making your grocery bill and fuel bill, and what I think most Americans are talking about, I think that's really what they're talking about. And I think there's a lot of times, I think, sort of confusion between the two in terms of QE being real dollars in the economy that flow into your grocery store to buy more oranges or some shit like that, right? And so I don't disagree with your take on that, Q, except for to say that, like, the Fed is focused, I think the Fed's largest tool is psychological, impact on the markets. And a lot of what I believe they were doing back in the COVID debacle was a function of, like, giving assurance to the market, right? Like, part of the reason why, Powell has to come out yesterday is to be effective in calming markets. And, oh, by the way, even though he said we have a weakening economy, look what the market did yesterday. And it's partly because he gave assurance to the market. He basically gave them clarity. He kind of, like, didn't shake the bubble and didn't, like, confuse them in any way. And so, and kind of one last sort of tangential point is that what the impact of QE sort of has in some ways in boasting assets is something we refer to as the wealth effect. And so Americans tend to spend more when they feel more wealthy, right? So, even though you're on paper perhaps more wealthy because your home went up in value, you're not really paying attention to all of your neighbors' homes going up in value, but you feel richer. You look at your 401k account, or you look at your Schwab account, and you're like, oh shit, we're richer. And so you tend to go on, you upgrade your lifestyle, you buy a nicer car, you go on the extra vacation, you buy your wife some extra jewelry, whatever, right? You send your kids to nicer schools, whatever, right? And so in effect, in as much the wealth effect kind of has a precipitous effect on sort of like consumer habits, like I can see that. And I think that's a lot of what the Fed was doing, but you're not wrong. I mean, there is an impact to QE. It just isn't what the rest of the country is talking about when they hear a 9.1%. In my mind, those bank tokens and this purchasing of bonds doesn't really have much of an impact on your grocery or fuel bill.
But it does have an impact on the money supply. Like that they are in essence printing money out of nowhere. They are the arbiters of what gets printed. Any bank that issues a loan, where are they going to get the money, quote unquote, printed from? They let the Fed know, hey, we issued this loan. We need to print X number of dollars because this loan is now out in the marketplace.
Well, Q, let me ask you this question, because it depends, I guess, depends on how you define money, right? So a lot of what the Fed does, or when they say printing out of thin air, basically are bank reserves. And unless banks, we rely on the commercial banking system to actually get that money out into the real economy. And so, you and I, if, you come to Chicago and I go buy you a steak, I can't pay for that with bank reserves, right?
Totally.
So depending on how you define money. And so I would just tell you, I concede to you that what the Fed does with QE impacts certainly assets. And that is the most important thing, I think, in terms of breaking generational wealth, right? People that have assets get wealthy, people who don't. It's that simple. And so I can see that that's the real impact, and understanding that is actually a better understanding of assigning the cause and effect more appropriately, or perhaps the blame more on the money printing that Ben and I talk about in terms of fiscal deficit spending. But I would tell you, yeah, you're right, I think, about the QE and the impact it has toward, the impact it had on housing and real estate and the stock market over the last, number of years. But I don't think it impacts, the way people think about, price inflation at the pump and the thing. So I really just want to try to draw that distinction. So I don't disagree. I think you're right about us being half right. And actually we agree on that. And I think you're right about that, but just as it relates to assets.
Okay.
Q's not used to me agreeing with him. He's like, wait,
No,
I'm
like, fuck, where's the argument now? I don't know where to argue.
Conversation's over. We can all go back to the gym.
So I want to throw something else out there now, Ben, and not to interrupt you, but this is more directed to you. We have seen the Fed rinse and repeat this sort of system of let's inject liquidity into the market, let's decrease the Fed funds rate, and that initiates a new bull run off of whatever tiny or significant bear market that we have essentially seen since the 2007 financial crisis. And so those instances where you actually see liquidity injected into the markets, we've never seen inflation to this level. So that strengthens your argument and weakens mine that the Fed doing whatever they do has not had an impact. I would actually, however, almost counter to say those moments, in my opinion, actually in a weird way show the Fed can control both supply and demand, because they can artificially create market liquidity and take it out of the market as well, essentially pushing demand higher or lower. And in turn, almost directly, I guess it is technically indirectly, but as they fuck with demand, the supply systems will get fucked with. And then in turn, supply is now adjusted and so on and so forth. So yes, you can't directly say that they can impact supply, but I think they have shown that they think they can. And this feels to me more like a move and an attempt to do exactly.
Well, that's not what Jerome Powell's telling you, though, right?
Yeah, but Jerome Powell also is telling me that there's no recession. Jerome Powell also told me inflation was transitory a year ago. And now,
I know, but why would he want to admit that he has less power? I guess, but I want to hear Ben's take on this.
Yeah, exactly. Ben, what were you going to say?
Listen, if you really want to try to understand this system, we got to bring in like repo markets. We talk about asset swaps, bank reserves. How much do bank reserves matter, right? Like how are they used? What is their effect on the market? Let's talk about interest on excess reserves. Do we talk about that a lot, right? I think a lot of Bitcoiners just see QE number go up and they point to that and say it's money printing, and it's very easy to do. The real point, right? And I think kind of Q hit it on, I don't know if he knows that he did this. Q hit it on the head here, is it doesn't really matter, right? This is what we're talking about. The Fed is really destructive. It doesn't matter the mechanism that the Fed is actually doing unless you're trying to understand what's really happening. The point is that the Fed is influencing markets in either case. And that is destructive because we want free markets. We want people expressing their values, and we want price discovery to come back to reality, right? We want, and there's another big point here. We talked about assets. It's probably been outlined a million times in the show, but it's worth mentioning here. Again, we're talking about money supply. We're talking about increases in the money supply and how that mechanically works in the market. Well, part of the money supply is the fucking stock market, guys, right? So like, you want to talk about like the money supply itself, where we're adding liquidity to the stock market when we're in a bull run. We're taking liquidity out of the stock market so that affects the money supply too. So I don't know where we're trying to go with this, because to me, let's like, I like to focus on, how can we, again, if you want to go into these deep dives about how the monetary system works, I think it's really important to do. But what does it mean for us, I think is, a different question. And right now, we're faced with economy that has too much debt. The supply chains are definitely out of whack. We need energy investment. Americans are facing very high inflation, historically very high inflation, and we are at very low unemployment numbers, right? So, I mean, I would suggest that we should kind of take a step back for this conversation and focus like, well, what, instead of just arguing about how the Fed works, I don't think we're going to kind of resolve that here. So, where can we kind of take this conversation a little bit more focused?
Let's then.
Well, first of all, I just want to jump in and say your cat is clearly furious about the current state of the United States
Markets,
economy.
yeah, it's tough.
I just want to say that I empathize with that cat.
Mm-hmm. A lot of people do.
Q, please continue.
I'm really sad that Ben doesn't think that four guys talking in their basements with no real economic, beyond maybe our armchair economist expertise, could solve the issue that is the Federal Reserve. Kind of disappointed in you, Ben. But no, you're right. Like, we're not going to solve these issues. We can just sit here and like just get me as angry as possible for the sake of making Pete Rizzo think that we do our jobs properly.
Nice.
Or like, we can maybe try to discern what they're saying versus what they actually mean. John, like, you brought up Alf's comment and we were DMing about that. Just this idea that what he's not saying, how carefully you're starting to see all of these different news headlines, all of the different verbiage that people in the political sphere are using. Like, hater or lover, Elizabeth Warren at least is the only Democrat who has the fucking balls to come out and say we're in a recession. So there is a very clear fear, and I think.
Wait, sorry, who said that?
Elizabeth Warren. Elizabeth Warren.
Yeah. So
has literally.
Okay, so
P, my secret crush, which is not so secret anymore.
There you go. Yeah. So I'm so glad that you brought this up, because I wanted to go into it. Like, what is happening in terms of Elizabeth Warren's tweets and the kind of growing unrest and potentially breaking ranks around whether or not we're in a recession or not?
Well, I commented on this yesterday a little bit, but I think I would ask I think Ben was bringing up a really great point, and I would ask, Q and others, right? Like, because, like, okay, so we're in a recession. What do you want the Fed to do, and what do you want Congress to do? Is what I would ask, right? Because I keep hearing the Fed's going to screw this up, and what I really hear is, depending on what outcome I'm okay with, right? If I'm okay with high inflation, then I want the Fed to keep printing. And I want the Fed, and I'm using, Bitcoin Twitter speak right now before I get beat up in the comments. But if I want to tackle inflation, and I recognize that we're going to need some deflationary, like, there might be a deflationary event, then maybe screwing it up would be, like pushing us into a recession and tightening lending and capital considerations going into a time where perhaps we should loosen them, right? Just in theory. And so my take on it is, like, I think that I would ask you guys, like, what do you want? What would you do if you were Jerome Powell? What would you do if you were Nancy Pelosi or Chuck Schumer? And, like, those are the things that I think are important to ask, because a lot of the answers I've heard all just tilt one problem in one direction, another problem in another direction. And I think that's where the more important thing to perhaps discuss is.
People are going to get really uncomfortable when I say this. First things first, if I was Nancy Pelosi, I would be doing exactly what she's doing. I'd be fucking buying all them NVIDIA calls and just fucking selling them off of whatever I tell the press. Like, Nancy Pelosi has figured it out. If I was Nancy Pelosi, that is actually what I would do. She's the only one doing what I would do in her position of power. For everything else, and we touch on this a lot on this show. Ben, you even said the words that we don't have a free market. What should have fucking happened in 2008 is these banks that went too fucking far should have been allowed to fail. Oh, but the whole global economy. Cool. That was going to be our fucking reset, and we were going to learn from our mistakes. But guess what? Mommy and daddy, i.e. the Fed, came and bailed you the fuck out of jail, and you didn't learn the lesson because they got a really dope lawyer who told you what to say, and then boom, you got off with a fucking fine that mommy and daddy paid, and then you're off doing the same bullshit again. And so that's how we're where we are. So the uncomfortable truth, what I would have liked to do if I was Ben Bernanke, okay, let him fail. I also know if I'm what Ben Bernanke's thought process was, well, hey, shit, if I let these banks fail and then I'm done with my term as the Fed chairman, who's going to hire me to come talk to them? Who's going to pay me my 6-figure speaking fees other than the banks that only bring in the former Fed chairman to tell them what they want to hear? So the incentive structures there are so fucking corrupt that it allowed us to just almost put off what should have happened in 2007, 2008 to what we are now still trying to put off. It's time for us to just rip the Band-Aid off. And unfortunately, there are going to be casualties, and there will be. And
I don't think you know what that means, Q. I really so, the reality is like, so a couple of things. One, Bernanke didn't pass Tarp, right? Congress did. And Hank Paulson came out with a one-pager famously on the White House steps and had a one-pager that was Tarp, right? It was like, wait, how do you read 800 billion? And by the way, that was like under $800 billion, to put this in perspective. We've normalized $1 trillion here, $1 trillion there, just to put that in the take. But it still doesn't change the fact that Jerome Powell wasn't there then. Jerome Powell can't go back in a time machine. He's here now. And so I hear a lot of criticism of Jerome Powell, which, it's fair. But what would you have him do? Right. So he admits it's a recession. All it does is shake the markets. People get even more pissed off. More people are likely to lose their jobs. Oh, we want him to print further. Okay, well, that gives more license to the CPI running hotter. Right. So like in a lot of ways, there's not really any good answers. There's consequences to any solutions here. And so, like, to me, for instance, like, a lot of people want, or they're saying, hey, we want, if Elizabeth Warren's right and we're headed into recession, well, then what? Do you want them to pass another stimulus package and actually pump more money into the economy without solving these supply chains? And I just think there aren't necessarily good answers. And simplifying it to something like, hey, I agree. Like, we're dealing with decisions that were made 20 and 30 years ago. There's no doubt about it. But we are where we are now. Now what? And I think that's a much tougher and harder to have, conversation, especially on Bitcoin Twitter, if we're being honest.
I got to jump in on this.
Please.
I got to jump in this, Q, because there's two things. One, I definitely have to just 100% echo everything John said about, listen, when you do policies that are trying to respond to these things, you're benefiting some group at the expense of others, right? We're literally seeing that happen right now. Whatever that bill you had up on the screen in the last segment, it was like, we're going to give money to a bunch of people and other people aren't going to get it. That's it's redistributive. Maybe those people need I'm not commenting on whether it's good or bad. I'm just saying that's what those policies are. But to go back to the 2008 thing briefly, because listen, I could do probably an hour or two on this discussion, so I'm trying to make it really succinct. The problem that 2008 was, and this is what Snyder talks about all the time, and he doesn't say it this way, so I'm going to say it a different way. The problem that happened in 2008 is that we monetized the MBS securities. They became the money of the economy. So letting banks fail wouldn't have fucking fixed that problem, bro. Like, listen, the problem is fiat money is bad at being a medium of exchange, has poor verifiability, poor portability, and terrible store value. And we started monetizing MBS securities. Go watch The Big Short again. I'm not asking. I'm not saying this is a joke. Go watch the fucking movie again, okay? At the very end, when they still have their short positions open, right? And the MBSs aren't changing in price, right? It's like, why aren't they changing in price? People are defaulting their loans. Why? You want to know why? Because they were fucking hodling. The banks hodled the MBSs. They didn't trade. This is all in Snyder's work in the original Eurodollar University series, that these things have become money and they're not good money. That problem hasn't been fixed. It's still part of the problem that these assets are really part of our money supply. The only way to fix that was with Bitcoin. Let's bring it back, guys. The only way to fix that is with Bitcoin. So this concept that Joe and I talked about last time and John was talking about is, let's try to figure out a path where we can keep society from collapsing such that Bitcoin can get big enough to absorb these problems. That's the message I gave last time, and that's the message that's my opinion.
You're absolutely right. And John, you're also right that the jarringness of just letting this all collapse will have such a drastic effect that we can't even imagine some of the effects we'll have. 100%. Ben, the mistake you made is citing The Big Short, because I literally just finished the book yesterday.
Let's go.
So
are you going to correct me now?
You are right. Again,
I
only
didn't know you could
halfway.
read, Q. That's great.
You're right. Fuck you. Where you are right is, yes, these banks were hodling. These banks, the MBSs weren't going down. All of a sudden, it's looking like it just doesn't work. But there's one material issue, and that is the fact that the bond market is not a public market, and that it is a private market that the bankers do over the phone, and they dictate their own prices. So when their models were then telling them, like, no, I don't care that there are a couple of defaults, this bond that I hold is still a viable bond. It still has value. I'm not selling it for 70 cents on the dollar, like it fucking 100 cents on the dollar. Go fuck yourself. So that is a distinction, and that is what I really want to solve for first, because we can go into this Bitcoin standard and we can have a world where all we use is ultrasound money, and we can fix all of the mistakes of fiat.
Do not use that term. Ultrasound money is a scam term invented by
Sorry,
Vitalik Buterin.
sorry, sound money, whatever. Not the
What are
point.
you going to tell me next? Code is law? Like, what's next?
Not the point I'm trying to make, guys. The point I'm trying to make
World
is
computer.
we are only going to reintroduce the issues and mistakes we've made in the fiat system in a Bitcoin system, because human greed, human corruption, that is inherent. That is part of our biology.
I kind of disagree, Q, because that's not the problem that I was mentioning. I was saying that the main problem, and I'll say it, I'm just going to literally say the exact same thing again, was that the assets, the money, the banks use as money, what banks use as money, the global financial system uses as money, isn't money. It's not dollars, it's not euro dollars, it's assets. And the reason they do that is because our money is a poor store of value. So we monetize those assets that are meant to be done other things. They have a specific utility. And this is so crucial to understand. That's what 2008 was, and that problem hasn't been fixed. And there's not really a way to fix that problem.
But do you think it's more assets, or do you think it's more debt? Because most of these assets are held through debt.
I think it's liquidity. I think the best way to think about it is like liquidity to like quell volatility is effectively what it is. I don't disagree with your guys' points. I really don't, especially on this one, which is going to drive Q's brain crazy again. But I do think that, like, you know, there's still. So I think like as like, if you remember The Big Short, since we're doing The Big Short, right? Like, where I think this market is fixed is like when you look at the ratings agencies, right, and the conflict of interest that were there. But I do think the rest of it still is a market. Now, whether it's the right like way for the Fed to be involved and how much liquidity they should pump in and how much easing should happen. But I do think the limitations of like, and where like I want people to, you know, again, I've brought it up over and over, like this doesn't affect the conversation from the Fed yesterday. The Fed wasn't talking about asset prices yesterday. The Fed's focus when they're mentioning 9.1% as it relates to CPI or 6.9% as it relates to PCE, personal consumption expenditure, like those don't really take into account the conversation we're having here. And I just don't want to make, I want to make sure people don't get lost. the other thing is there's one other point that I think was really worth mentioning. There's a guy named One's Compliment in the chat. I think he's added some really good value. But the one thing I would contend to that, and as it relates to this conversation, it only leaches out, Q or Ben, when the banks issue credit, right? So like that, all of the things that we're talking about right now, and if you look at charts since 2008, the banks haven't been lending at the same rates. In fact, that like, inherently our money is inflationary. We know they tell you they target 2% inflation, but they have not been able, they struggle to meet that. And that's because they depend on banks being able to lend. And it hasn't really been worth it for the banks to lend in the way that they have pre-GFC. And so like, we still haven't fixed this problem in terms of actual real money supply in the way that maybe most Americans think of money, right? And the way where Ben, I think, is, to kind of bring it back to the conversation we're having here, like, Ben, I agree. Like, they don't really, like, they have their own form of money, right? Like, that's what these interbank tokens are with bank reserves, is like Jeff Snyder or Alpha, those guys kind of joke. And that really is, like, I think, a function of a system that does only transition when you are not on a credit system, right? So like the world that we live in now is a credit-based system, and Bitcoin isn't big enough to take that over yet. Like, I don't want Bitcoin to be the global base monetary system yet. Like, it needs to be far bigger, with far bigger tools, far larger stress tests. And it's like at $1 trillion, which is not even right now, that is literally not even like one drop of salt that it is into the world's credit markets. It's just not.
Yeah, so there's two main ways that we get inflation. If you're kind of following this conversation, it's this fiscal deficit, Congress spending money thing, and the other thing is banks creating money through loans. So the checks on those things are society as a whole voting for things, and this system of banks' willingness to lend and people's willingness to borrow. Those are the checks on the expansion of the money supply, for the most part. So if you want to look at inflation from a monetary perspective, those are the things you should be looking at.
Yeah, what is the required reserve percentage right now? It's fucking 0%, right?
The reserves don't really matter because of this fact. So take what I just said, okay? That banks' willingness to lend, right? I was saying that's the check, not reserves, because reserves used to matter when reserves were gold and money was paper against gold, okay? And people actually took so Snyder goes over this in a recent What Bitcoin Did episode, not to shout it out too much, sorry. But it's a good watch.
Great fucking podcast.
That he says that, people don't ever, so banks operate on a system where they're relying on the claim for another bank's claim to possibly get fiat actual dollars if somebody actually demanded them. There's only 10%. It's like between 10 and 20% of the entire money supply in actual physical notes. So if we tried to do a bank run, we couldn't physically do it because there's none in the paper, right? So
yeah, literally, it's like not possible.
Those are the checks on that reserve thing that you're trying to talk about. It has nothing to do with some fucking reserve ratio that the Fed dictates or whatever. It doesn't matter, right?
Wait.
There's no check on the expansion of the money supply because fiat money is so unverifiable, unportable, undivisible. Like, think about this. This is really the case. Reserves don't matter at all.
I agree with you. It just blows my mind that banks literally do not have to keep any, like, what, it used to be like, oh, you give them $1 and then they manufacture, they just out of thin air create $10 and they loan out $9. But that's like there's nothing now. So it's literally like a bank can just loan out infinity dollars. And to your point, the only thing that limits that is their own appetite for risk.
And people's appetite for taking,
we know people have appetite for. We know,
exactly.
like, the problem isn't the appetite of the people wanting to
borrow, the borrowers,
money, but the risk premium isn't there, right? So someone was referring
at what rate,
to
right, John?
Yeah, for sure. And like, One's Compliment is like telling me to learn about open market operations, which, by the way, having spent a lot of time thinking about this, he's right. Like, it's just so fucking crazy to think about, and like, it's not a very, like, I don't know, tangible topic, I think, in some ways. But there is the risk premium for banks to lend money doesn't make sense, right? Like, with interest rates this low, like, how much money do they make lending out money? And like, when they're in certain situations, like, you find that most people aren't really credit worthy. So one of the reasons that I'm less concerned about the housing market right now, to kind of take this back to like today's real world examples, is that we don't have like the same type of ninja loans that were happening, no income, no job approved loans that were taking place in 2007, right? Like the average credit rating of homeowners that are being approved is like 760 or something like that. Like I remember when even getting a loan for my home in like 2018, my wife's a doctor. I have, significant income, and like just going through the hoops for that, I was like, Jesus Christ, like what do you do if you're, on the periphery? And so you can tell that like, we're in a different structure for like, a setup to kind of have a similar 2000, 2008, 2009. Like I don't think it'll be a housing bubble that just pops. But what you're realizing is that ultimately it doesn't make sense for banks to lend. The risk premium just isn't there, and they can just go overnight into the repo market and get, a small yield and ultimately like continue on. And so I think like this is one of the things where people get lost, is that like the money supply really doesn't grow unless the two things that Ben, or the effective real money, as I think most people define money, only really expands when two things happen. It's when banks lend, and so they create a liability, but also those become deposits for that consumer who can go and start a business or go and pay employees or whatever, right? Buy a home. Or two, when we have these like drunk sailors with pens in Congress basically printing $1 trillion every couple of weeks apparently. And so like unless those two things happen, we don't really get new money into the economy, which drives, I think, the underlying conversation that's kind of driving the Fed speak and the amount of macro attention that's taken place in Bitcoin that I've not seen before. Like I don't remember a bunch of Bitcoiners caring about the FOMC meetings like, back in 16 or 17. But that doesn't, unless those two things happen, there's not more dollars at the grocery store competing over those same goods. They're just basically ledger money, as Ben talks about, transferring between ledgers on various banking books, and that's the reality of it. Problem solved, Q.
So there, yeah.
I mean, my larger issue, like I agree with everything that has been said. I genuinely do. But my issue is not that, honestly, my issue is the accountability of it. My issue is the fact that these bankers went out over their fucking skis and they were taking advantage of the American consumer. And in turn, when they made poor investment decisions, and we need to look at it like that, they thought an investment in this individual buying this house or taking this loan or whatever was a viable thing. Because there was a point where bankers had to really calculate risk. They don't have to do that. And they still don't have to, because now they have this, for whatever fucking reason. And the reason is because Tarp back in 2008 came and fucking bailed all of them out of the stupid decisions they made then. They run under this assumption now that, well, if we fuck up that badly, they'll just bail us out again. So
he's not wrong, Ben. He's not wrong about
that is the cancer that needs to get out. And that only way I think we get rid of that is by letting them so gloriously fail. Otherwise, fractional reserve banking has been around for centuries, long before the dollar. And it will return long after the dollar if we don't try to really stamp it out. That's what I'm worried about. And that's where I'm focused on. And so we are having two different conversations about it. But that's just the point I want to hammer home.
I mean, I'll probably try to confuse you here and kind of agree with what you're saying, because to me, that conversation you just had is actually an end the Fed conversation, not penalize the banks, because the Fed's implicit and explicit guarantees are what led to that risk taking. And I'll say it again for folks that aren't following along. The Fed, through Federal Deposit Insurance, through their willingness to recapitalize banks, right? This is ostensibly what the Fed was designed to do when it was created in 1913, was to prevent bank failures. Like literally, that was the whole precedent for it. So if you want to get rid of those malincentives, you want banks to actually worry about failing, you got to get rid of the Fed. So to me, that's just an end the Fed conversation. Cool. And that's a really politically unpopular thing to do, because we think they're fixing inflation right now, right? So again, Bitcoin's the only way that you can fix that.
I mean, I think we're all on the same page. And the Fed, that is solution number one. Now the banks are really going to be stuck holding their own bags, and you're not going to see socialized losses and privatized gains anymore, the way we've seen, especially over the last 15 plus years. Now let's continue solving this issue of how do we get to that Bitcoin standard, that glorious world. All right, we have ended the Fed. That has been our decision here. I, as Jerome Powell, my last decree was, I'm going to ape in, I'm going to print $1 billion, buy $1 billion worth of Bitcoin, and then boom, I'm just going to burn the building down. I made that decision as
And get a
Jerome Powell.
perm.
Wait, one thing I want to make clear to the audience, and Ben, John, please correct me here, but the Fed is not a governmental organization. It is a private organization. I mean, it was founded as a private organization.
Yes.
Quasi-private.
Yeah, I agree with Ben. I mean, yeah, they're not elected officials, right? And you got like shares that are owned by private banks or whatever. But
but I mean,
when it was founded,
the political. Yeah,
they called it the Fed to basically affinity scam everyone.
My favorite fact about when the Fed was
I think that's a fair Bitcoin Twitterism that I'll agree with lightly.
All right. That's a nice way of saying, P, you're fucking wrong.
My favorite Fed fact of when it was founded was the fact that 6 men who controlled 1/6 of the total wealth in the world were the people that met and decided to form the Federal Reserve. So tell me about corrupt incentives. It's them trying to just continue to hold their stranglehold on the global wealth that they have.
Yeah, if you haven't read The Creature from Jekyll Island, go read it. It's a fantastic book. I want to shift topics slightly just for a moment. So this actually came out earlier today, but I just saw it. Biden is, of course, in conversations with President Xi of China, and he said officially that he does not support a formal declaration of independence by Taiwan. That is fucking wild to me. Like, what the actual fuck? What world are we living in right now?
We're living in a world where we don't want to go into World War III.
I guess, man, but like Taiwan is the major manufacturing center for all of our
TSMC
5 and 7 nanometer computer chips.
Yeah, I have to.
Like, what the fuck?
I do have to say I do own and still hold shares of TSMC or TSM, but I do need to.
Are a bunch of people following your trades over here?
No, we have been asked. We have been asked to start.
No, but John, he's following the Pelosi index, and so we're following his. So
hey man,
exactly.
I saw a tweet from Unusual Whales where it listed all, like, it's pinned on the Unusual Whales account. I don't know who Austin Scott is or Austin Mack, but dude, I want that dude to run my portfolio so bad, man. Like, everyone is fired except for that guy. But no, I think so. P, you asked a really important question. I'm not some like expert in Taiwan, but I will say, like, this is one of the things where, like, I want to see Congress act, right? Like, I'm not for all this types of intervention, but there are certain types of capital allocations that make sense to be able to move, in sort of like a national defense interest. So, like, we should be manufacturing our own chips, right? And so, like, the chips bill seems to be an incredibly, like, bipartisan play, or at least it was. Like, it got sent over by the Senate. Congress seemed to like it. It seems like a very pragmatic piece of legislation. And yet we're in a political atmosphere in 2022 where even the most basic shit, like, yo, let's not depend on this little ass island that's controlled by this big ass country that could start World War III with us. And oh, by the way, everything we have in our lives has a chip in it. Like, these are basic things, especially on the back end of seeing supply chain shocks of COVID, that I would love to see. Like, this chips bill should get passed, and we should be domestically manufacturing our own fucking chips. Pardon. I hope I went silent on that word before you guys get in trouble. But the take on it is, like, to me, as it relates to, like, us as Americans, like, yeah, I'm not some geopolitical expert, but it's obvious to me that this is a very, very, big threat to national defense and our economy if we can't get chips to power our economy.
I mean, I think it's really interesting because a lot of this is just posturing at this point. I was paying more attention, quite frankly, when you heard the rumblings of Russia possibly invading Ukraine. I was less concerned about how we handled the Ukraine of it all and more concerned about what is now the precedent, what is the message we send? Because if we just say, all right, fuck it, you could take Ukraine, then in theory, Xi Jinping is going to say, all right, well, you let Putin take Ukraine, you should, in theory, also be letting me take Taiwan. And we've all talked about it. Everyone knows how important Taiwan is to the global chip markets. To emphasize this point, 50%. It is estimated that 50% of all chips that we use, your computer chips, your phone chips, that fucking dumbass smart refrigerator that you bought for some reason, your TV chip, everything, your cars, all of these things that have a microchip, a microprocessor, 50% of those chips are manufactured and made in Taiwan. Now, TSM, which I hold shares of proudly, opening a chip foundry in Arizona. It should open, I believe, in 2024 is the latest estimate of when that should open up. And a lot of this will help us, I think, navigate around the China-Taiwan issue. But let's be perfectly clear here. China is not going to just, oh, we now control Taiwan, but let's let Taiwan operate as such. No. The headache of the chip shortage that we've seen over the last 2 years, I've said crazier things on this show that have actually come to fruition. So I'm just going to say the most outlandish thing possible. But like, you could very well not see a new iPhone for a decade type of developments. This will be something that all of a sudden you have Russia and China, who have become the biggest allies of one another. Whether or not we want to accept it, whether or not you want to read those stories, that is becoming very, very true. Now you have one country that is a dominant influence of the global energy space, and now you have another country that is now controlling and being a dominant influence in the tech sector. John, I hate American interventionism personally. I am hard pressed to find an example over the last 50 years that it worked. I genuinely want an example of when it has worked in the last 50 years. But I do also agree with you that we can't just allow this to happen. So
it's an issue of national, like, strategic priorities or strategic interests. Like, it takes a decade to build a new chip foundry. Chip foundries are the most advanced mechanical and computer-based things that we can build as humans to date. It takes, like, collectively hundreds of years of knowledge and PhDs and people that are there building this stuff. It takes years to create the systems, to manufacture the other systems and the tools. You literally have to, like, build everything on site. It's almost like installing a moon base. Like, you have to ship the raw materials, then you have to, like, build the tools that build the next step in the tooling, and then you have to use those tools to build the next step in the tooling, because it all has to be done in clean rooms, and it requires massive expertise. So you can't just, like, scale up chip manufacturing, which is why there's so much interest in the United States in building chip foundries here and all in other areas in the world, because everybody understands that, like, China is going to invade Taiwan eventually and basically try to fuck over everybody else in order to maintain their own dominance, which that's their strategic right, I suppose, unless somebody else can oppose them. But it's wild to me that Biden is so clearly just saying, yeah, fucking go for it.
Well, I think what he's also sort of what I hear though, P, is that, like, I think he's trying to appease China and trying to say, hey.
Exactly.
So I think, like, if and listen, the guy's probably taking a nap right now, right? So, like, let's stay focused on the prize. But I do think that you need to, especially when you're fighting a war, effectively a proxy war on one front with Russia, Ukraine, trying to stir the hornet's nest with China could be really, really tricky, right? Like, so I don't, again, I'm not the political scientist here. I don't really know. But what I would say is that, like, if you could solve chip manufacturing domestically, and we could get some nuclear energy domestically, the amount of pressure that would take off of our, like, various, I don't know, political pressures across the world would be immense, right? Like, if we could get true, I mean, the reality is we could be truly energy independent with just our fossil fuels here, but it's just, like, it's not going to make sense for a lot of oil executives moving into a world of, like, that we're moving into to make 10-year investments in certain pumps. But, like, I do think that this chip thing is really, really, really tricky. We have a short window to figure this out, and we have a bill right now in Congress that should get passed, like, and it should be, like, something that everybody should be supportive of. And I don't care if that's money printing or not. Like, those are the types of things that is, like, to me, part of a war machine in a wartime, to be able to have domestic, independence over our chip manufacturing.
Yeah, I mean, the libertarian in me is going to be strangling the non-libertarian in me by saying that the investment in this chip facility in the United States, again, considering what P said, that it takes 10 years and $100 billion to build one of these things. And sorry to Q's TSM bags. I think we just kind of need to do this thing, right? It's one of the few areas where it's like, again, all these policies, they benefit some groups at the expense of others, but we want to be able to have cars and iPhones and stuff. So I 100% agree, John.
Why is it I
It's
always get the
hilarious to
short
me that
end
there
of
are
the
people.
stick? I
It's
keep
hilarious to me that there are people who are.
go ahead.
There's just
Dude,
some
did
people
you
who are
guys
like,
know how much Pete or Ben and I liked each other before you invited us on to the same one? Like,
I love. Also, Ben was like, I mean, I don't think I have anything to say. Like, what can we possibly talk about today? No, I was just gonna comment. Like, it's hilarious to me that there are people in the world who are like, I mean, wouldn't that be a good thing? I mean, like, aren't there too many cars? Aren't there too many machines? We got to get back to nature, bro.
Yeah.
Like, let's embrace the animals and let's die hungry and starving en
Microdosing.
masse.
Yeah.
Yeah. Did you say microdose?
Yeah.
So I'm down with that.
Let's just microdose and just fade into that good night.
Let me tell
we're
you,
just gonna
man.
all go hang out with Brandon, quit him, and
Yeah.
forage for mushrooms in the woods.
Just
If this shit goes down, I want to be on Brandon Quittam's like survivor team or whatever, bug out team.
all I'm saying is 2 stems and a cap, and you're good.
Okay. Jesus.
Look, I do think though, like, let's talk about the intervention or how should the U.S. intervene here. Fun fact, if case you guys didn't know this, my stock mentor and person I essentially just trade off of, Nancy Pelosi, not only was she often
get a room already.
Look, not only was she buying all these NVIDIA calls and her Intel stocks and all these other chip stocks, she also, her and her husband, soon to be ex-husband and soon to be my future mistress, Nancy Pelosi, they decided to take a short little vacay. Do you guys know where they went on vacation to?
Taiwan.
They did. Like, I'm not kidding. Joe Biden in the fucking White House had to literally call Nancy Pelosi and ask her to step down and not meet with chip manufacturers in Taiwan.
He was just trying to pump his bags again, I think, guys. I don't know.
Dude, it's so funny because I think I use the analogy is like somebody's like, oh, they were talking about the Fed curbing their conflict of interest rules and stuff and like trading rules. And like, do you think Congress will ever do that? I'm like, I don't know. Do you think Smeagol's going to give up the goddamn precious? Like,
Exactly.
Someone right now, I want to highlight to you guys, Nancy isn't even in the top 5. You guys got to go hire Crenshaw or Austin Mack. Stop looking for the 6th pick in the draft. Go to the top if you're going to get an inside trader.
Hey, man, Giannis Antetokounmpo was a number 14 overall pick. So you can find gems later in the draft.
The thing about that Austin Mack or Austin Scott character is he doubled up the next guy. He's his portfolio crushed, man.
Things in a perfect world that if we lived in a perfect world, Congress would pass today and we would be done with certain things.
Well, they're gonna pass the bill, by the way. That's why she invested in it. Like that was your signal.
Yeah, exactly. Like
so
fuck these people. I wouldn't care if it was like, look, here's the thing. I'm gonna eat your lunch. I'm gonna kill your children. I'm gonna take everything that's yours. Let's fucking go. You're gonna vote for me because you're an idiot. That would be fine with me.
But you just described Mitch McConnell. That is exactly like he will look you.
No, that is not
true. He will look you in the eye and tell you, "I'm gonna fuck you over."
He will not. I don't know where this shit comes from.
He's a turtle anyway.
Yeah, he's a fucking turtle monster like everybody else. He says whatever the fuck he wants to get the outcome that he wants. Again, I'm exaggerating what these people should say, but it's the duplicity that drives me fucking crazy. Like, obviously, everyone is going to do whatever is in their best interest. The thing that drives me fucking crazy is the narrative games that are played where people try to portray themselves as these fucking saints, and then they are just fucking everybody else over. It incenses me. It's insane.
Pete, do you remember during the COVID break, there were 4 senators or 5 senators that basically dumped all their stock. And then some of them even, I think,
Kelly
Richard
Loeffler.
Burr in North Carolina, Kelly Loeffler, Dianne Feinstein. This wasn't even a uniquely left or right thing. Like there was senators on both sides of the aisle. And it wasn't just that they dumped their stock, but they went and told their their donors, right? They are caught telling their donors, hey, you're gonna want to dump your stock in a couple days here, right? Like, I'm not shocked by any of this behavior. It's absolutely abhorrent, and it's something that definitely is not like we should tolerate. But on the other hand, here, like going back to the to your original question, T, about this Taiwanese stance, like I think what we should be doing is trying to be increasing our BATNA, and the way you do that is with energy policy. The way you do that is with ultimately securing chip manufacturing here, and you got to do that ASAP, and then you can take on a much different stance with China and Taiwan once we have those bases secured. But right now, they absolutely got you by the balls if they invade Taiwan. There's no doubt about it.
John, that sounds like what a status cuck would say.
Absolutely, yeah.
You piece of shit.
Okay, Ben, armchair economist over there. What are you gonna do? I want Ben to put on his armchair presidency hat on. Like, what are you gonna do?
Oh no, I agree with John. I just wanted to call him a status cuck.
Well, it takes one to know one. Ben and I actually have certain pledges we say at the end of our comradic meetings here, man. So.
Don't tell my libertarian Bitcoin friends I'm actually a status cuck.
I love the idea, Ben, of like an image of you with like a libertarian hat on, strangling your whatever you're. Yeah, exactly. Or maybe you're like jerking yourself off. I don't know how that works.
So we're all fucked.
That escalated quickly.
Either win.
Can we check Q's temperature versus yesterday? Like, so Q, do you hate Jerome Powell more or less than you did yesterday?
Oh,
to
man.
be honest, like I just feel sorry for the guy. Like,
see, he's your boy too.
I'm getting to a point with Powell, especially, where I actually think he's the stupidest person in the room, but doesn't know it because everyone sort of patted him on the back for so long. Been like, yo, dude, you're great. He's gotten participation trophy after participation trophy to the point where he has failed upwards. And all he does, like,
wait, what?
Let me finish my point.
Yeah, I'm not following this either.
Let me finish my point.
Okay, let Q square the triangle here.
So Jerome Powell has less financial credibility or knowledge as far as education goes than I would argue anyone in this room, in this sort of thing right now. And specifically, I will do me. I majored in finance. That is literally my only qualifying factor. And I'm still more qualified to understand finance than someone who majored in political science, who was a merger and acquisition attorney for 2 years, whose boss got hired by the Treasury Department back in 92. And since then, he has been a government stooge. He has worked in the government for so long and has just, in my opinion, failed upwards to the point where he's a yes man, does what he is told, and that's all he has been doing. In 2018, Trump cried about the fact that the stock market went down because one or two of his fucking rich friends said, yo, fix this, I'm losing money. And what did they do? Powell pivoted. And Powell pivoted again in 2020, and Powell's about to pivot again. I'm going to make my call at the top of the year, if not at the very end of this year. We'll see them pivot again. And he is only going to do it not because he thinks that's the right thing to do. It's because the person who employs him is telling him, yo, do that. If you don't, you're out. And so I'm just at a point where like, I actually think he's so stupid, but just doesn't know it.
Well,
and I just feel sorry for him.
I'll just ignore the fact that you're a credentialist for a second, that you were worried only about his credentials, and then
this is his main argument against Jerome Powell.
I'll also point out that it's funny because I feel like we have it both ways sometimes when we criticize the Fed. It's like, well, it's this private institution, but then you just demonstrated how they're kind of beholden to political pressures and that they kind of have to cave to that stuff. So,
but it's changed over time. When it was formed, it was private, but now it has become an office in which the president of the United States decides who leads that charge. That is a political enterprise, whether or not we want to.
Wait, why does that matter?
But keep in mind, in this particular instance, right? You had both guys who ran against each other appoint the same guy. So Trump fired Yellen, hired Powell. Biden, his political rival, kept Powell. So I agree with you that I feel bad for him in some regards, right? Like he's got no winning answers. He's got less losing answers if he gets it right. And he's got really most of his influence is how calm he is on FOMC press day, right? Like, so one other quick anecdote, Chris, if you can give me a collage of P's facial expressions during Q's last, dude, I will pay sats for that for sure. If you could do like, but not like a Dali, you know, whatever journey, whatever version of it. Like I want the actual collage of P's face. But the thing about it is like, and this is why I try to ask it. Like I am not some Powell apologist, but I've heard some really credible people, including someone we all respect here. Like Joe Carlasari thinks that Powell might be the best Fed chairman we've had in the last 20 years. Like I think he's done a better job than Bernanke, arguably, and I think Alan Greenspan was sitting here telling you, well, we don't do money, right? And he was referring to the Eurodollar system back in 2002, before I thought, back when I thought the Eurodollar system was just the Eurodollar like pairing. And so I would just say, listen, I don't think the Fed's being asked to do a lot of things. Like I almost kind of was thinking of the analogy, and it doesn't quite work, but it's like calling the guy who fixes the medical equipment and asking him to perform the surgery. You know, it's just like this weird set of like expectations from the Fed. Meanwhile, we want them to fix this, and we want to stranglehold them, right? Like they actually just can't do much except for really calm markets and set interest rates. And by the way, the interest rates are getting rejected. Like this is the point that I think kind of gets left. Their biggest tool is interest rate control, right? Right. Acute. And look at what the 10 and 30 year are doing. Like look at what this, you know, couple $100 trillion market's telling you. They're rejecting. They're calling Powell's bluff, and they're basically saying, hey, we expect you to cut rates as soon as next year. Like,
for context, because we brought this up, not to interrupt you, John, the 10-year yield has fell all the way down to 2.687%.
Yep.
The Fed fund rate sits at 2.25 to 2.5%. That is absurd. That's not supposed to be that close and tight. And that is when we say the bond market is sending a message, that is literally the bond market saying, don't go any higher than this. Do not go higher than this amount. So that is what we mean. I want to clarify that point.
Sure.
You're right. I'm a cuck. I did use credentials to qualify myself, Ben. You're absolutely right. You want to know someone who has no credentials and is more qualified than me? Dylan LeClaire, Bitcoin Magazine Pro Team. Quick little plug for them, but I stand by what I said. I stand by what I said. That Jerome Powell is a piece of shit.
That you are more qualified.
I am more qualified than Jerome
to
Powell
manage financial markets
Yes.
than Jerome Powell.
Yes, I am.
And the rest of us, I think, as well.
No.
Yes.
No. That's not what I was saying.
We're not with him.
I'm not saying. What I said was any of us are more qualified than Jerome Powell, but I will only speak to myself and share my qualification factor.
That's not what I heard. I heard you say that the sunshine shines out of your asshole.
I also told you to sell at the top and buy at the bottom, but you wouldn't listen and you did the opposite. So
Ooh, that hurts, B.
I buy at all times, my friend.
That hurts.
Okay, so for my Powell apologists below me, for my Joe Biden loving colleague next to me, where do we go from here? I will leave us with two questions that I would like everyone to answer. First, will there actually be another rate hike at all? Second, what is your definition of a recession?
Ooh. Listen, the definition is to me, it doesn't really matter like what the official definition or whatever. Like everybody has their own definition of recession, and it's clear we're seeing downtrend. If we continue to see downtrend, the recession deep, like I think we're already in the recession personally. How deep that's going to be, how horrible it's going to be for people, it depends on the Fed. I always say this, and John hates me for this because I'm like, well, it depends on the Fed, right? It's like, what are they going to do? I mean, it's true in a way, but it's
not just John that hates you for that; it's also me.
Yeah, I know, but the second question is like, you can't avoid it. Again, gun to the head. Do they hike again? I think they will, and I think that could be something that breaks markets, or it couldn't. But John? Do we know like what's the market pricing in right now as far as the hikes go?
So I think the market. So what the Fed's telling you is that they're going to go to like 3.8 or 4 or something like that, right? And what the market's saying is you're not going to go above 2.8. But this is also looking out on the curve. If you look at the euro, what I find more interesting is if you look at the Eurodollar future curve, what it's pricing in is the Fed. So the Fed's telling you it's going to hike all the way through next year. At least that's what they told you before. Yesterday, Powell said we're going to be data dependent. That's Fed speak for, we're happy to change if circumstances warrant it. But I think that the Eurodollar future curve is expecting them to be cutting as soon as next year, right? And that's basically the credit market calling the
bluff.
The Fed's bluff. Yeah. And so I guess yes, I expect the Fed to hike some more. I don't know if it's going to be 3/4 of a point, right? I think you're probably looking at 50 basis points or 25 basis points. And especially if you have a rally in equity markets, that's going to give them more license to do so. But I think the Fed, the old saying is the Fed keeps hiking until they break something. What I really think it means this time is the Fed keeps hiking until inflation is no longer the narrative that the world is focused on and the markets are focused on. There's an adage of bad news is good news in markets, right? Because the Fed put, right? The Fed will come in and save the day. And the irony with this inflationary setting, right, which is one that we haven't dealt with in most of our lifetime, and certainly since the GFC, is that good news is good news and bad news is bad news as it relates to CPI at least, right? And so if you were to get CPI to come down, that would be interpreted as good news. And I think the markets would respond positively to the Fed taking control. I think you could make the argument that the pump yesterday was that the markets want to see the Fed tackle inflation. They want to see the Fed be serious about inflation. And so I would tell you to both your answers. I think the first question is yes, I think we're gonna see some more hikes. And two, I also agree that we're either in a recession or shortly thereafter entering a recession. But again, I really want to emphasize, I think this matters more for political considerations more than it matters for market considerations. This is a lagging indicator. Markets are forward looking. The reality is to sniff this out. So those are my thoughts on your two questions, and good chatting with you guys, man.
P, you have to answer these questions because you are such a macro economy expert.
Please repeat the question and use it in a sentence.
Part one of the question used in a sentence is, will there be a rate hike in the September Fed FOMC meeting? And the second part of the question is, what is your definition of a recession?
Interesting.
This also goes to
let's be
prove
honest.
that P does not listen to anything anyone else says on the show, because two people already answered this question.
It's not anyone. It's you, Q. I'm sorry. I just gotta. Oh God. I mean, I'm just gonna be pulling it out of my asshole, but I think, yeah, sure. They raise rates by 0.25% in September, and the definition of a recession is the technical one, which we've had for fucking generations. 2 quarters of negative GDP tells you exactly what it is. Any attempts to change that are just manipulations and trials and tribulations and buy Bitcoin.
So I will also answer the question that I asked to all of you, and I'm going to cheat and say that I'm looking at the Atlanta Fed market probability tracker, which is sending me a sign of 25 to 50 basis point rate hike. Something to that effect should happen. My definition of recession, and I say it in jest only because it's the only way I can actually say it. But I'm dead fucking serious when I say a recession is only when you yourself have lost your job. And watch this White House press secretary get fired and then come out and make a statement saying, we're in a recession. Watch someone from this White House get fired and come out and be like, we're in a recession. And then it's literally, then I'm going to be confirmed in saying the definition of a recession is when you yourself lose your job, because that's the way they will paint it. So just something to think about. Stay humble, stack sats. Ben, where can everyone stay up to date with everything you're doing? Where can people find you?
Just at Mr. Cool VP on Twitter. Check out What the Fuck Happened in 1971, and I'll keep editing What Bitcoin Did videos.
John, where can everyone keep up to date with you and the awesome company that you launched that you're going to have to come back another time?
Not sure why you guys want to follow me, but you guys can find me and harass me on Twitter at PayItForwardDad. Looking at my DMs, it looks like a few of you guys already are. I'm going to make Q reply to all of you as me, but no, I'm just kidding. Yeah, hit me up on Twitter, Telegram, PayItForwardDad.
I'll see you guys in Twitter Spaces. Ben, please respond to my DMs.
Yeah, we'll see.
Later, guys.
You guys
See
are
ya.
great.
It was a pleasure having you both. Thanks for jumping in.
We're going to jump to a commercial break, and then we're going to be joined by Jimmy Song. So stick around. And as always, use promo code
Jimmy?
BMLive to get 10% off of everything in the Bitcoin Magazine store, including the latest edition of the print magazine. We'll be back.